We're going to talk about the butterfly chart pattern, and it was discovered by a guy named Bryce Gilmore, and it's a reversal chart pattern, and it consists of 4 distinct swings in the market. And if I'm going to be honest with you, I much prefer trading the patterns that I outline in my free price pattern guide, and you can grab it by clicking the link in the description or up here on the right. So here's where the butterfly trading pattern, it gets a little too precise for my liking. And you need certain fib ratios that were made public by Scott Carney. And if you use ratios from Fibonacci to identify certain patterns, what you're essentially trading is a harmonic pattern, and that's what the butterfly pattern is. So in this video, you're going to learn a butterfly pattern trading strategy, and it's going to include how to identify the butterfly pattern using the required fib retracement and extension ratios. You're going to learn how to calculate your stop loss and where to set your profit targets. And let's be clear, these types of patterns, harmonic patterns, they're not for everyone, because you have to buy into Fibonacci as a means of trading, and you have to believe that there's actually an edge in doing so. Now that said, one important aspect of the butterfly trading pattern is an A to B equals C to D formation. That's something I personally use as a rule of thumb for profit targets and potential turning points. And remember, it doesn't have to be an exact match. Now the butterfly pattern, it's similar to the Gartley, as both form a warped W or an M shape. The biggest difference is the Gartley is considered a completed pattern when a retracement and an extension level coincide. And the butterfly is considered to be complete when 2 fib extensions coincide. So for the butterfly pattern to be found, we need 4 points in the market. We need an X, an A, B, C, and D. But the D is considered a potential reversal zone and not a point. It's a zone. And that's the location that you're going to start looking for a trading position. And each swing has a relationship to another one, which are specific fib ratios, and they're needed to validate the swings. And both bullish patterns, the bullish butterfly and the bearish one, they use the exact same ratios. So the A to B leg should equal 78.6% retracement of the X to A leg. The BC leg should be between 38.2 and 88.6 retracement of the A to B leg. It's a pretty large range there. The C to D swing is 168 to 261.8 extension of the A to B swing. And the most important number in this pattern is the 127% extension of the X to A leg. Now this here is an example of a bearish butterfly pattern where we want to get a short position. The red star is the potential reversal zone, and that's where you're going to look to position in the trade, and that's the zone that you're going to look at. And because the reversal zone can be known ahead of time, remember, it's the 127 extension of X to A and the 168 to 261.8 extension of A to B. So you can set an alert for when price enters this zone. So how do you trade it? Well, Tradingview has a superb tool, XABCD pattern, for drawing the butterfly pattern, but you can also do it with just a simple Fibonacci tool. Now this is the X point, and it's going to be the first place we click with the Tradingview tool, or the Fibonacci tool, doesn't matter. This ending forms that X to A swing. So we click at this point, and we get the AB leg. And in this example, we have a 70% retrace. Clicking here gives us the BC leg. So the C ends at 87.9 pullback against the A to B leg. Now here is the potential reversal zone and completes the CD leg. This forms a 153% extension of X to A leg and 235 extension of the BC leg. So remember, the potential reversal zone, we know it in advance. And this chart shows the same chart, but we're going to use Fibonacci retracements and extensions through the Fibonacci tool. So after point 4, the BC leg has completed, you can now project upwards to find the zones and mark off the area of interest for the potential reversal zone. The red zone is the 1.618 extension of the BC leg and the 1.272 extension of the XA leg. And it can also go to 1.618. Again, there's a range there. So the 1.272, that's the minimum zone. And you would prefer to have price closer to the 1.272 end of this zone here. Now the yellow zone includes the extreme extension level of the BC leg and the minimum 1.272 of the X to A leg. And while the hard and fast rule is that the A to B leg must retrace 78.6 of the X to A leg, let's agree that markets are not exact and close is close enough. Every method of trading should have a stop, and the harmonic butterfly pattern has a built-in stop loss location. So your stop loss on this trade here should go just beyond the trading zone that's outlined via the fib ratios. And some traders, if price has not breached the 1.618 extension of the XA leg, will put their stop loss just above that location. Now profit targets, they can be fib retracements of the entire C to D leg. You can also trail your stop above each high for a short each time a new low is made. When you're considering profits, use the levels as zones and monitor the price action in those areas. What we don't want to see is strong momentum against our positions. And remember that fib levels hold no magic in the markets. So learn to line up the levels with actual support and resistance levels that may affect the direction of price. Now, as I mentioned, the important numbers of the butterfly are the 78.6 level and the 127 level. We can use those two levels to form the bones of another trading strategy. Here we have an uptrend and we pull the fibs from highs to the low. When price meets the 78.6% level, we take a long position with the 127 extension level as our price targets. And I want you to note that at the top of the chart where the red X is located, price did not breach the 78.6 level and therefore there was no long trade. We then reverse to trading shorts. Now another method that will utilize the same important ratios of the butterfly allows us to play both sides of the trend. So in this case, we're trading the break of the 78.6 level, taking profits at that 127 level, which is the exact same as the last strategy I just talked about. The yellow dashes are the break of the 78.6 level. The yellow splash is the 127 level where you take profits and reverse if possible. See, here's where we're doing something a little bit different. We're going to look to see a reaction in the opposite direction of our previous trade. So we're looking to take advantage of a few things. Momentum, once price breaks the 78.6% level, and reversal momentum once price hits the 127 level. So price reverses and traps traders that must exit. The last trade on the right is a current long that just broke the 78.6 level. As for stops, you could use the ratio of 61.8 to tuck your stop behind. So wrapping this up, the butterfly pattern, it's pretty simple to spot when you see a pullback, the A to B leg, from the initial XA leg. You will then look for a higher low uptrends that would form the end of the BC leg. The stop loss and the price targets are built in, which takes much discretion out of the butterfly strategy. And the biggest issue for a trader is defining swings in the market that can be used to draw the pattern. And the rule of thumb is just use swings that are obvious. So take a look around your charts for the patterns and define your trading rules for the butterfly strategy or for the last two I just talked about. And to have the trading gods on your side, give the video a thumbs up, take a second to subscribe. All right, thanks for watching.